Well, thanks for tuning into the Market Wrap. I'm Niraj Shah Nickey Mirchandani, and it turned out to be a slightly difficult day of trade if you were having a bullish stance, especially also because there's a weekly options expiry and the volumes as well as the volatility picked up in trade today. But first, what the indices did do in the session, and bring up the Nifty first and show you what moved and what didn't. So the index about 0.4%, nothing too dramatic, and FMCG came to the rescue. But I think the bottom end of the screen shows you where the pain points were. UPL down about 12%, not a heavyweight, but corrected. Ultratech, Shree Cement, and the broader end of the spectrum, the other cement stocks also corrected. And today we had heavyweights like HDFC Bank being down about 1%, 1.5% in the session. This was offset to an extent by what happened to FMCG, as I said. Look at that. The top four names, all FMCG names, all doing well. I think it was a bit of a return to the defensive, so to say, because the BSE FMCG index essentially did very well in trade, and that was essentially the saving grace in trade today. But no doubt that the stock of the day had to be UPL, and I'm sure Nikki's picked that up as the large cap one that has to be addressed. 12% down. There's a press conference slated to happen, Nikki, but what led to this downtick?
Sure, there have been a couple of whistleblower complaints against the company saying that there have been wrongdoings on many levels in terms of the financials of the company. Responding to that, UPL tried to salvage investor sentiment to an extent, but then investors have a mind of their own to read into things and between the lines. UPL responded to alleged whistleblower complaints, said that there is, a sustained campaign to malign the image of the company, and the whistleblower, it also denied the statement that the whistleblower is a member of the board, and said that similar nature complaint was also received in 2017, and back then, the company had undertaken a detailed review and concluded that those transactions were completed at an arm's length and were in compliance with the law. It confirmed that there is no new complaint and it's just repetition of sorts. But then sometime back, early part of the year, also auditors of the company resigned, because of which there was some amount of concerns going on for UPL. And again, this whistleblower complaint, which is, it said it's not new in nature, but resurfacing in the media platform again, probably led to some downtick coming in on the counter. A lot of efforts from the management, but little takeaway for the investor sentiment as a whole. But then, what are your views on UPL as a whole? What do you make out of it, and any trends that you're catching up in the mid-caps case?
I mean, UPL is a difficult one, right? I mean, market doesn't like any kind of uncertainty, and this one is no different. And as a result of which, the stock cracked. Now, the management on its part tried to allay some fears, they came, etc. But clearly, they've seen that that's not enough, and which is why this press conference that has been slated at about 4:30 p.m. India time. We are doing this just before that, right? So I can't really quite tell you what they will say in the press con, but I think it's essentially more of the same. The question is, will the market buy it tomorrow morning and over the course of the next few days, or does this stay as a bit of a bogey on UPL for a while? That remains to be seen. So I think we'll wait and watch for that. The broader end of the spectrum was interesting today. PSUs did what they did, but cement corrected quite strongly in the session. And that was essentially that one big thing that stood out. IRCTs had the largest fall on record today, so that one stood out. In fact, look at the losers. Dish TV was up 20% yesterday, down about 8% today. There was also weakness in Strides Pharma, down about 4.5%. Hathway corrected about 4.5%. Hindustan Copper corrected. Edelweiss corrected. So those are a few names that cracked in trade. What did well? Wockhardt has something going for it. Really good, strong show. But I think if you look at the top of the pile, Shipping Corporation of India up about 20%. There's some strength in SpiceJet. So the travel flurry continues. SpiceJet is at 100 rupees. It was at 52 less than a month ago. So it's nearly doubled. And IFL Wealth, I think on a brokerage note, went up a bit too. So selectively, barring cement, I think there were no other big trend makers in trade, but individual stocks based on news corrected. Nikki, what stood out?
IRCTC, where the government, of course, if the promoter is planning to offload 20% stake in the counter and place at a 15% discount, clearly doesn't all go well for the stock. 15% would be sold right now, and with a green show option of other 5%. The OFS kickstarts today, at least for non-retail investors, and for retail investors, it will be tomorrow. On back of that, 20% stake sale, 15% discount as compared to previous market price. Clearly, the stock has taken a hit. What also did not do well in trade was India Cement and bunch of other regional players like JK Cement as a whole. The regional players probably took a bigger hit after there were complaints, or there were searches which were conducted in few of the cement names like ACC, Ambuja, along with Ultratech Cement. That was a report which Reuters suggested. Morgan Stanley came up this morning and said that this is going to be having an adverse impact on the stock to an extent of 5 to 15%, if at all the ongoing investigations that have been conducted on ACC and Ambuja officially they are supposed to come true, because that will lead to a price delay that the brokerage or most of the brokerage community has envisaged for the entire financial year FY21 and FY22. So on back of that, there will be some amount of correction happening in for EBITDA. The losses would be sharper for South, which is already reeling under pressure when it comes to pricing power, given the kind of government situation that we have. And apart from that, the East region, where the capacity is picking up, or there are a number of additions, and an absence of pricing discipline in that region, clearly, the EBITDA margins and the realization are in for long haul for such cement companies. On back of that, you've seen, some amount of road but coming in for cement companies, which otherwise were doing well in trade.
Well, the trade takeaway is therefore, just before we figure out what's happening with the world, and I think we summed it up already. High beta got a bit of a drubbing in trade, but FMCG came to the rescue. I think the recent news flow could put brakes on the cement rally for some time. It may not necessarily be just a one-day phenomenon. The only thing is that where I maybe differ a bit from the consensus is that the Bank Nifty, which looks slightly wobbly today, may not crack too much if the FI flows remain robust. Hitherto, we've received about 90,000 odd crores since the 1st of November. Time will tell in the next few days. If indeed the FI flows continue, then maybe, just maybe, banking might continue to do well. But speaking of FI flows, Nicky, what about the global picture? How is that looking?
At this point of time, looks to be pretty decent enough, both in terms of US stock futures at least, and also the European markets. UK and European lawmakers have decided to, potential post-Brexit trade agreement by the weekend. This follows an in-person meeting between the British Prime Minister and, of course, EU as a whole. So because of that, you've seen some amount of traction building in, and you're seeing European market doing extremely well with trade. But it remains to be seen back home how the banking stocks, or for that matter, even the NBFC stocks, will continue to react given the kind of RBI regulation that has come out in terms of dividend payout. It remains to be seen what kind of further impact will the NBFCs show. But with this, it's a wrap. Thank you so much for watching.